Steve McCann, well, shares up 10% as we're speaking. Must be very nice to head off onto an international roadshow with that in mind.
Yeah, very pleasing reaction, obviously. I think we have highlighted to the market the growth in our development pipeline around urbanisation in gateway cities. That's been well received, as has, I think, the strength of our balance sheet. We're in a strong position from a liquidity perspective, and there's been a good reaction to that.
It's very much, I suppose, an endorsement of your strategy, your transformation. You're still cleaning up the other end, of course, and the share price has fallen in the last year over 30%. Where are we on the engineering and the services business?
Yeah, so our core business, which is around the urbanisation strategy, had a pretty solid year with just over 800 million in profit and a return on equity of 12.8%. So we're pretty happy with that achievement. We did flag to the market that we were going to exit the engineering and services business. We took a significant provision in the first half of the year, which did have a material impact on our results. Yes, it was very material. So we made a decision, we did a full review, and our decision was that that business has a different risk profile to the remainder of our business, and the right decision is to exit that. We're in the process of a sales process, and we have a number of parties who are in due diligence, conducting due diligence at the moment, so that's going in the right direction, and in the coming months hopefully we'll be able to come out with some more
But am I right in thinking that the cost of sale that you're expecting is roughly what you're provisioning for?
So we've separately come out in the first half and estimated a potential cost of sale, and that includes a whole series of implementation costs, so advisor costs, etc., redundancy costs, IT costs, but also potential costs to close out our existing projects, which may include some indemnities through the sale process.
Yeah, the buyer taking on the risk.
Exactly. So we've come out and estimated 450 to 550 million being that range, and we think that provision remains, or that estimate remains, not a provision, it's an estimate, that remains appropriate.
I realise that you've made this decision, it's no longer core, but going back and looking at these projects, there are obviously a lot of them are road projects, tunnel projects. What went wrong? Why were there the cost blowouts? Was it a wrong assessment of risk? How do you see it?
Yeah, we bought what was then called Lendlease, the Lendlease business, back in 2011. Our view was that there was going to be significant growth in that infrastructure market, in the heavy civils engineering market. That has proven to be the case. So strategically, it made sense, but clearly things haven't gone the way we planned. Some of these projects do have a significant amount of risk, and when you're in the ground, if things go wrong, it's quite difficult to bring them back. There's not a lot of flexibility in what you can do. So it's important to get the risk profile right, it's important to get the contingency for risk right, and obviously in a couple of those projects we haven't achieved that, and that's had a big impact. So
is that going to shift the way you do business going forward? Are there lessons learned?
Yeah, well, certainly from a perspective of what is our core strength, and our core strength is placemaking, it's urbanisation, and most of that obviously involves real estate projects, large-scale mixed-use precincts in gateway cities around the world, and that's our core, and that's what we're going to focus on. So
you've had a win today, I gather, with the New South Wales government actually deciding to drop the case against you for here, where we are here at Barangaroo, a win to Crown and Lendlease over your harbour views.
Yeah, we're very pleased with that outcome. Obviously, it's never good to be disputing anything, but we have got sightlines now that are going to be preserved across central Barangaroo, from the Harbour Bridge to the Opera House, and that's a great outcome for us. So now we'll move forward with the launch of One Sydney Harbour. Okay,
you've got a couple of other projects with the New South Wales government, most visibly the footy stadium, 729 million. Now, Sports Minister John Sidoti is promising the stadium can be built on time and on budget. Do you think he can do it, given that clearly you as Lendlease didn't think you could do it?
Yeah, look, we've been quite disappointed about how that has been reported. The reality is it was a two-stage project. We were appointed for the first stage. That's still underway, and we'll complete that successfully. And we were entitled to put a price forward and a time frame forward for the second stage, which the government chose not to accept, and they've gone back to the market, which they're entitled to do. So, unfortunately, it's been reported a bit differently than that, but that's the reality.
Yeah, but do you think, going back to my question, that it's possible to do it to their specifications on time and on budget, $729 million?
Look, we gave them an estimate of our timeframe and cost based on a certain design and certain scope today. They'll now make decisions as to what is actually going to be built and how they're going to proceed. So it's hard for me to comment on how that will play out.
Yeah, but I mean, it sounds like, as I say, something's got to change from your experience.
Well, we put our best foot forward, but clearly the government factors in a whole lot of things when they make those decisions, and they're entitled to choose the builder that they want to move forward with, and unfortunately in this case it's not us. But importantly, on stage one it's going well and the feedback's been very positive. All right.
Then there's the huge build at Sydney Modern, the Art Gallery. Now, Lendlease has withdrawn its initial bid to construct the $344 million project. Again, where are we with this project?
Well, again, I might repeat that we've been disappointed with the reporting on that project as well. The fact is there is a process underway. There are 4 bidders and we're one of them. So I'm not quite sure how we draw the conclusions that have been
So you're
drawn.
still in the running. You're
Exactly.
still talking about it. But it sounds like, just looking at the design and everything, it is a very big project, isn't it?
It's a large project and it has some complexity, obviously, with the location, and it's not an easy project to do. So we have indicated to the government what we think we can do. We think we've come up with a good solution at a pretty attractive price, so hopefully we will get appointed.
From a punter point of view, it seems that the New South Wales government is having a lot of difficulty with its project management. Would you agree with that?
Look, I think the New South Wales government has a huge pipeline of projects that they're seeking to bring to the market. And that's going to underpin employment growth going forward, so it's fantastic for Sydney. There's always challenges in major projects, and it's up to the private sector and the public sector to work cooperatively together to try and deliver the best outcomes for Sydney, and that's certainly what we're trying to do, and no doubt what the government's trying to do as well.
And your relationship with the government at the moment?
Very good.
Yeah.
We've just been appointed on the Randwick Hospital, which I hope is a good indication of that, and obviously we're now moving forward on Sightline, so I think our relationship's in great shape.
Yeah, that's a $700 million project, isn't it, Randwick?
It is, yeah. So it's a very significant one.
Well, look, internationally, which is where all the focus is, Steve, your urban pipeline development pipeline has tripled in 5 years?
It has, yep.
Yeah. Where in particular?
Yeah, so we, several years ago now, we flagged to the market that we thought that on a relative basis, Australia was likely to slow and the opportunities perhaps become less for us. So we started to really invest our time heavily looking overseas in the gateway cities we'd identified. We were at 25 billion of pipeline back then. We're now at just over 80 billion, so it has more than tripled. We've secured some major projects in London, in Milan, and more recently in the US. We've announced the Google partnership recently, which is a fantastic addition to our
Well, you built
backlog.
the headquarters. You're building the headquarters in London, are you?
We're building the headquarters in London, and now we'll be doing 3 major districts for them in the San Francisco Bay Area, about 15,000 homes in total.
What's the dollar value of that project?
It's about $20 billion in A dollar terms, in N value. So it's a big commitment, it's a big project. We're working through the planning processes now. It'll be a staged project. And like a lot of these projects, they're land management style projects. So we don't invest a whole lot of capital up front. Obviously that gives us time to bring in funding from our third party investors and manage the risk return profile appropriately.
And are you going to be joint venturing? There were some questions on the call this morning about whether you'd be bringing in joint venture partners, again, from a funding point of view.
Yeah, across our portfolio, in that 80 billion of urbanisation projects, about 50 billion of that is what we would call investment grade real estate for institutions, commercial office buildings and residential. The commercial office buildings about $29 billion in total end value, and the residential build to rent component has about 17,000 apartments. So each of those components will require third party capital. Sometimes it's joint venture, sometimes it's in a commingled fund. The build to rent market, we've launched 2 new partnerships, one in the UK and one more recently in the US with First State Super. So each time we look at the product we're creating, we talk to our investors and we try and marry up the best investor with the right risk appetite for the projects we have.
Right, and in terms of earnings coming through to the bottom line on this great pipeline, when are investors going to see that?
Yeah, so obviously what we look to do is bring those projects to market as quickly as we can. We've got to get through the planning processes and the approval processes initially, But we're already seeing significant contributions from some of our offshore projects, like Pile Bar Quarter in Singapore made a very significant contribution to our earnings this year. And some of our other projects, like a Google, we would expect earnings to first come to us by about FY21, and that'll be the first phase of the build to rent. But they're all staged in different ways, and we obviously do bring product to market to suit the demand in the particular cycle that we're in.
So much construction going on all over the world, Steve. There have been issues, particularly around cladding. I know there's a little issue and dispute around the Adelaide Convention Centre, for example, which Lendlease was involved in. How do you see the cladding issue and how it can be resolved?
Yeah, I think the cladding issue and all building or construction related issues when it comes to defects or quality, for us we look at it as a safety and quality issue. So it's all about trying to make sure that we produce a safe, high quality product that meets our customer expectations. But for the industry at large to succeed in doing that, it's very important for us to have simple, clear, stable regulations and a stable mechanism for enforcing those regulations. So we encourage that anywhere that we operate. It's challenging when it's open to interpretation, and I think we'd all like to see a bit more clarity in the markets that we operate. But from a Lendlease perspective, we do pride ourselves on the quality of what we deliver and the safety of what we deliver. Finally,
your outlook, Stephen, for investors. I mean, clearly everybody's happy today with these results, but going forward, how do you see the property market?
Yeah, we're very excited about our outlook, obviously, and we've talked a bit about the urbanisation pipeline. We think that'll more than double our funds under management over the next several years. We've doubled our funds under management in the last 5 years alone, and obviously the pipeline was smaller then, so we can see significant growth that will underpin a fairly strong recurring earnings stream going forward. The property markets more generally, clearly geopolitical issues around the world do impact on global confidence, and so we've got Brexit, which is still ongoing, and we'd all like to see that resolved. We've got Hong Kong, we've got a number of challenges. In Australia, the residential market, we're saying, is near the bottom. We're seeing affordability at the best levels it's been in most major cities. In Sydney, the best it's been for 5 years, I think in Melbourne 4 years, and Perth and Brisbane the best it's been for about 15 years. So they are good indicators that we should be reasonably confident about the market coming back in Australia.
Great to be able to talk to you. Thank you so much.
Thank you.